All opinions expressed by Shuhei Abe are solely his own opinions and do not reflect the opinions of Sparx Group and/or its subsidiaries. The opinions expressed in this video are for informational purposes only and should not be thought as an inducement to make a particular investment. No information presented should be construed to be an offer to sell or a solicitation of any offer to buy any shares in any investment vehicle managed by Sparx Group and/or its subsidiaries. The statements and opinions expressed in this video are subject to change without notice. Past performance is not indicative of future results.
Hello everyone, I'm Shu Abe, President and founder of Sparx. Today I would like to share with you my thoughts on Japan. This year, after more than 20 years, Japanese stock market closed above 22,667. I believe that rising stock prices are a leading signal that Japan's economy is finally becoming a normal one. We must not ignore what the stock market is telling us. It is not the time to be spending all of our time and energy arguing whether the market will continue to go up or not. The economic reality, what is occurring all around us, is a preview of Japan's next era. While conducting our research, we are increasingly hearing that corporate managers and entrepreneurs are seriously thinking about what must be done next. They need to adopt a new mindset. We should not forget that most people have been caught in a 30-year deflationary spell where they have not done anything and prices did not go up. At the global macro level, there is evidence that general prices will gradually rise. We can see on this chart that global money supply has grown 70% in the past 10 years to $87.9 trillion. The growth of money supply has been faster than GDPs, which has created a gap between the two for the first time since 1990. If we believe it is politically not an option to shrink the money stock too quickly, the only other option is to assume that GDP will increase to close this gap gradually. Some countries, especially the US, are already starting to slow their money supply growth as GDP growth is picking up. Even in Japan, the growth of money stock has slowed, although relative to the rest of the world, it is still faster. Thus, Japan is best positioned to benefit when the first wave of inflationary trends occur. For this reason, I believe an increasing number of our global investors are now looking at Japan's situation much more closely, even ones that had completely ignored Japan. Besides the Japanese stock market, I believe this first wave is also starting to positively affect land prices in Japan. Japanese total land value of about $13 trillion increased by 1% over the past couple of years. If you take a closer look at Tokyo, which represents 26% of Japan's total land value, it increased by 3 to 4% over the past 4 years, as you can see in this chart. Rising land prices indicate that the credit creation cycle has been normalizing, and the Japanese banks are starting to want to finally lend money. This is completely opposite behavior over the past couple of decades, where banks are only focused on getting their loans repaid. Besides the stock market and land prices, business conditions are the most favorable in the past 26 years across all industries. With business more confident, the job opening to application ratio for all of Japan is above 1 time for the first time ever. Even Hokkaido, whose ratio has always been the lowest among all regions and has never been above 1 time, This is unprecedented. Businesses are faced with a shortage of labor. Regardless of its size, big or small, both are facing a shortage of labor. Considering all these factors together, Japan's severe deflation period is over, and prices will start to increase. As I said, with demand for labor greater than supply, we would expect salaries to increase. However, in a deflationary environment, Japan had always been able to keep salaries low, while other prices fell as well. Today, Japan has reached a boiling point. For example, in the transportation industry, delivery companies have tried to reduce prices, even though e-commerce caused a serious labor shortages. In 2016, the number of packages delivered increased by 8%. Meanwhile, we assume that prices decrease because revenue declined. It also implies that salaries did not increase, although there was more work. This situation created a number of problems, and we have seen delivery companies increasing both wages and prices. Again, the abnormal cannot continue. The adjustment has started in Japan. Let's take a look at valuations. Since the bubble burst, the Japanese stock market has traded at the lowest price-to-book ratio in the world, at 1 to 1.3 times over the past 10 years. Everyone thinks it is normal. I believe that ratio will normalize to 1.5 to 2.5 times, along with the normalization of the inflation rate in Japan. The assumption is simple. The Japanese stock market will normalize and trade at the same level as other countries, assuming no special actions. If ROE of 8.7% and the current dividend payout ratio of 25% continue over the next 3 to 5 years, the Nikkei's book value will increase from current 16,000 to 20,000 by the end of year 2020. At the multiple of 1.5 to 2 times, the market will increase to 30,000 to 40,000 from today. I always like to tell my investment team that the future is someone's past. For Japan, I believe that we are in a very similar situation as that of the US in 1950s and 60s. As Keynesian policy was adopted and fiscal spending increased, the US economy became less volatile. The long-term interest rates were also kept at a low level, so that when prices rose, the economy entered into an inflation cycle. Those conditions accelerated and pushed the US economy out of deflation after the Great Depression. In my view, Japan is on a similar path. Deflation does not only mean that stock prices are cheap. More importantly, in Japan, prices of products are cheap, even quality ones. Japan entering into a normal state. There are chances for domestic-oriented companies that offer globally competitive high-quality products to benefit from rising prices because their products are absolutely cheap. One example is McDonald's Japan. I became interested in the company because the price of the Big Mac is easy to compare globally. On this chart, there are only 2 or 3 places where a Big Mac is cheaper than Japan. Even if McDonald's were to increase its price by 10 yen, which is still lower than other countries, its sales would increase by 13 billion yen or almost $140 million and generate higher profit margins. The McDonald's brand is still strong in Japan, so I wondered why McDonald's hadn't raised its prices. When I asked top management why they haven't done so, he said they still believe that increasing the Big Mac price would be negative. At the same time, he said that their sales per customer is higher than ever. He said that each customer was spending more on meal sets and other items such as desserts. In other words, the company's strategic moves have paid off and shall help improve its earnings as its deflationary period comes to its end. After my visit to McDonald's, I thought that company model is still going strong. In addition, we have been looking at the confectionery market in Japan. I learned that the difference in quality was not so different, but the difference in price was huge. For example, a couple of years ago, I visited Morinaga Confectionery and learned that the price gap between their chocolate and Belgian chocolate company Godiva was about 10 times. I didn't think that the huge difference in price was the same as the difference in quality. So I did a lot of blind taste tests with my friends, Japanese, other Asians, Europeans, and Americans. In the end, some liked Godiva, but some liked Morinaga too. I can't really say that difference in price is because of quality. Therefore, I assumed that the price gap would eventually narrow. To summarize, I strongly believe that the collective trend of extreme deflation to normalization will be a very, very big chance for us investors. I really welcome your interest in Japan because there are a lot of cases that we can look at. Thank you very much and all the best in 2018.